What's up everyone, it's iCurlyK here, and today we're going to be discussing time frames to use when trading. Time frames are a way of breaking down data. No different than breaking years into months and months into days. So today I'm here to help you solve the options trading mystery around time frames. The larger time frames are for swing trading and the smaller time frames are for day trading. It is important to ask yourself, how do you plan to trade? Are you day trading or are you swing trading? By answering this question, you'll have an understanding of how to view the three trading time frames. One being the macro time frame, which is the time frame you look at to get an overall view of the trend that is taking precedence. Second is the actionable signal time frame, which is the time frame you use to locate things like support and resistance or strat setups to make a determination on what has to take place before you can enter a trade. And third is your entry time frame. This is the lower level time frame that you use to enter the trade. Here is your guide to scalp trading, which is a trading style that specializes in profiting off of small price changes and making a fast profit off of reselling. Your macro time frame consists of the 1 hour and 30 minute, your actionable signal time frame, the 30 minute and 15 minute, and your entry time frame, the 3 minute and 5 minute. Next up is your guide to day trading, which is a strategy where a trader buys and sells or sells and buys the same security in a margin account on the same day. Your macro time frame consists of the day, your actionable signal time frames, the day and the 4 hour or even the 195 minute, your entry time frames, the 15 minute or 5 minute. Then there's your guide for swing trading, which is a strategy of buying and selling a security and holding for more than a day, which could also include several weeks or even months. Let's start with the week to week. Your macro time frame, the month and the week, your actionable signal time frames, the week, day, and 4 hour, and your entry time frames, the 4 hour or the day. Following is your guide for swing trading month to month. Your macro time frame, the quarter and the month, your actionable signal time frame, the month and the week, and your entry time frame, the week and the day. Finally, there is your guide for leap trading for a year or more. LEAP stands for Long-Term Equity Anticipations Security, which are contracts that have an expiration of a year or more. The macro time frame, the year, quarter, or month, the actionable signal time frame, month and week, and the entry time frames, week and day. Be mindful that this is just a guide. You can make revisions where you see fit. This is just to explain, for instance, why it may not be important to look at the year when you're trading within such a small time frame like the day. Unless, of course, it's the last day of the year and you're trying to figure out how the year has the potential to close, but that's a conversation for a different day. And hopefully you also leave with an understanding of why you may not want to look at the lower level time frames to trade something like the month or the year, because it's just a lot of noise that you won't really need and it could really leave you somewhat confused. If I can relate trading time frames to art, the smaller time frame is essentially all of the individual colors that make up the painting, but the larger time frame is when you take a step back in amazement of the overall painting as a whole. Well, I hope this video gives you a new perspective on how to view time frames, and if it was helpful, please remember to like, comment, and subscribe. Also follow me on Instagram at iCurlyK and Twitter at iCurlyK. Until next time, I'll see you in baggage claim. Bye!